Happy New Year and welcome to the live show. We're back at last, the first show of the year. Wow, it's good to be back. It's good to be around again. Let me know how you guys are doing. Let's see how we are. It's been a long holiday. It feels like it's been forever, and there's been lots of time to contemplate everything. For those of you that have had your first sort of Santa rally, I suppose. Your first holiday period in the markets. Let me know how you experienced that and how it went. Yeah, how's it, Roy? Welcome. Good to have you back. See, there's a few of us here, and we're on the go, man. We're on the go. So, yeah, price action trading. I've had one guy ask me to explain the trailing stop a little bit more, so we'll go over that today. Yeah, I've been thinking about what we're going to do this year and how it's going to go this year. There might be one or two changes. I might change the picture behind me. I might do a few different things, but we'll see how we go and we'll see how we get on. I must say, morning, Colin. How's it? I have, there was one or two really nasty comments in there, and it actually over Christmas and New Year made me think, why? Why am I doing this? And sort of struck a chord with me and made me think, should I be doing this? And then I realized I've got 9,000 odd really great subscribers. 98% of the comments are good. I'm doing it for you guys. I'm doing it to help you. So look at those guys, you know what I mean? So they can go to hell, really. So yeah, there's only one or two, and then I normally just get rid of them or whatever the case and tell them to go elsewhere. But yeah, very slow. Is my stream slow today? Oh boy, that's not going to go well, is it? That could be anything, and I hope it's not going to be. Hope it's not going to be a problem there. Let's just see. Yep. Okay. Right. Or did you mean the market? It's evening by Colin. It's morning by me. We got the morning here. Nice and easy, nice and casual. On Thursdays, I do the afternoon, and then you'll probably be asleep or something to that effect at that time of the day. Yeah, what happened with the Great British Pound Japanese yen trade? Oh, that one's still on the go. That one's great. The FTSE is, yeah, it looks like it wants to go down, eh? Looks like everything wants to go down. If I just look at this, I was looking at the head and shoulders on this S&P, and I was thinking, will it, won't it? And it kind of broke the shoulder and it went up. So the head and shoulders is gone, but I'm still not happy with it. It still just feels a little bit like it wants to crash down. So let's just see what it does with this support, and then we'll take it from there. It's not me that's slow, it's the market. Yeah, I was going to say, I'm thinking maybe it's just the market. That's just me overstepping my thoughts there for a moment. Yeah. I've had a couple of questions on platforms. Can I check out platforms? I can check it out for you, but it's quite difficult because, if I haven't worked on that platform, then it's just the same as all the others. But, I can't comment on every single broker's stuff. I don't know what they've got or how good it is or how bad it is and that sort of thing. So, yeah, I'll look for you. But, if you want something like that, send me the information. I'll have a look into them and I'll see what I think, but I can only give you an opinion. That's as far as I can go with it. Unless I know the broker really well, then we can obviously take it from there to the NASDAQ as well. But, the NASDAQ, on the other hand, look at NVIDIA. Wow, doing so well. So that's great. The DAX, I also thought this might take a bit of a tip down to the support level, and it seems to be going up at the moment. So hi, welcome. First time in, welcome. I'm glad to see you here. So those of you that are here for the first time, just know that we don't sit here and do 5-minute trades and things like that and try and make out that I can make loads of money or anything like that or stuff. That's not what we're about. What we're about here is we're a sort of almost like a group chat. I try and show you guys what I think and a little bit about my opinion of trading. I've been doing this for 30 years, and I just show you basic stuff. We chat about trades and questions and what you need to know and that sort of thing. I'm not here to do any kind of 5-minute showing off or look at me or look at my trades or anything like that. That's not what I'm about. Okay. I had one comment on the 50-50. Wow, the oak was nasty, man. Get some nasty people out there. Yeah, but people just don't understand. They don't understand that it's not about systems and it's not about squiggly lines. That oak was a bot. He creates bots, so he thinks he's a genius. Really, how can you trade with robots at the end of the day? Because they don't know the market. They can't feel the market. They don't know anything. They don't know what's going on here with the news and stuff like that. So that itself is actually stupid. But yeah, it's incredible that people don't understand that behind the squiggly lines are actually real people, real traders. You're looking for liquidity. You're looking for the money in the markets. And yeah, then they get nasty because I don't know, are they jealous or I don't know what's going on with people really. But as I say, it doesn't really affect me that much, but I was worried that it's going to take on my sanity somewhere down the line and I'm going to come up against it more and more and more. And I was thinking, why am I doing this? But then I realized 9,000 subs, you guys got to do it for you. I'm not doing it for me. But yeah, it's fun as well. And as long as I can keep it fun, I'll keep it going. That's the main thing. The SA40, I did say it would go short this morning because that long tail there. Look at it. Whew, there she goes, eh? SA40 is gonna come down, probably come down to the 72 level. Ben, hi Robin, everyone. How's it? Happy New Year. Using trading 212, but no idea if it's good value. I've heard trading 212 is okay. If you don't need loads of indicators and you don't need loads of toys and things on your charts, then trading 212 I believe is okay. And we don't need loads of indicators and loads of toys on our charts. So as long as you can see what's happening on your chart, then I'm sure they're okay, as long as they've got all the products that you want to trade. So for example, some of you want to trade crypto, some of you want to trade Forex, some of you want to trade commodities, some of you want to trade shares, some of you want to trade indexes. And in my case, I trade all of them because the more the merrier. And, if a broker doesn't have all that for me, then that becomes an issue. I'd like to have availability. Let's like, for example, I like to buy the VIX. And when brokers don't have that, it's kind of, yeah, it's irritating, that it's not available to actually trade. Okay, so CFD charges. Look, CFD charges, what you got to do, your contract charges, you got to negotiate your spreads. You got to negotiate your charges it's kind of based on who you are, how much you're trading with them. I mean, if you just putting $1,000 in the market and they've never heard of you and they don't know you, and it's going to be difficult for you to negotiate. But if you're giving them $100,000 or R1,000,000 or something to that effect, and you've traded before maybe, or you know your stuff, then you can negotiate with the guys and say, hey, no, I'm not paying that. I'll pay this fee or whatever the case. And but do be careful of these guys that offer you free, because it's not free. Nothing's free in life, eh? Nothing's free in life. And always wonder about these brokers that offer that, and then what's the underlying problem here? What's the situation? What's the payoff? Because somewhere down the line, it's got to be maybe it's because they're new, they haven't been around for 20 years or something, and they're just trying to get clients. Maybe they won't be around for long, and you're putting your money in there. That's tricky. There's a lot of things you've got to look at when it comes to these guys, but most trading platforms are pretty good and pretty okay, and you can generally negotiate a better deal with them if you need one. Some of them will simply just offer it just to get you in the first place. So for CFD charges, I'm not really sure what trading 212 has offered you, what kind of percentages you're paying. I mean, I don't think you should be paying much more than 20 basis points on a trade, like or 0.2% or something like that is like I think the going rate. 0.1 most people will get, but some are charging 0.5, 0.7% for a trade, which is unheard of. It's insane. And then also your spreads, the difference between your buy and your sell price. Watch out for that. That can catch you out, and it can catch you out quite quickly. All right, so gold. Where's gold going? Gold is just sitting in this range at the moment. It's not sure where it wants to go. So the best way to look at it is to just watch it in the range and just see if it breaks out of the range. Just trade it off the bottom of the range, trade it off the top of the range for now. There's not much more we can do. Brent actually went long. I actually called it long this morning from down here. I actually said 75.75, so it's coming back to that. Maybe we can get a trade off that and off to the long side. So that one looks okay. Euro US dollar. Euro US dollar is, well, at the moment it's going up, but it hasn't broken through the trend resistance, hasn't broken through what was support and is now resistance either. So it's basically kind of just going back up to this, and it might just go short again. Great British Pound should be doing the same. Yep, there you go. That's not going anywhere. It's early in the year. Everybody's still settling in and figuring out which way the markets are going. So you're not going to get any definite result just yet. Everybody's coming back to work and telling their holiday stories and all the rest of it. So, yeah, I don't think it's going to be just piling in just yet. And then the American markets are only opening this afternoon. There's the old coffee again. So, I hope you guys have been enjoying the other videos. I hope they've been keeping you busy. And I hope they've been helping you in some way or another. I did do a small couple of videos on other indicators that we don't use, just for interest's sake. I'll do some more as we go. I still haven't done the Bollinger Band one. I hate Bollinger Bands. I still haven't done that one, but I will do it. And then Great British Pound, Japanese Yen. I wonder if this is going to go down now. This is the thing. You see, I said to you guys about sell. I'm looking at this and thinking I want to close this position because, that's in resistance, and you shouldn't do that. You should actually just leave it and just see what it does. Okay, Bitcoin is going up again. But Bitcoin, you never know which way it's going to go, do you? But it's in a range at the moment. You see the range? Sitting in this range at the moment. But I would see that as quite a giant head and shoulders. Bit of a concern as well. It looks a bit like the US 500, actually. Interestingly enough. But yeah, it's going along sideways at the moment. Let's just see, because it's almost like it doesn't want to break through this 100,000 and go. The traders are like, ooh, that nobody wants to be caught on the wrong side of 100,000 here. That's probably where it is, what it's about at the end of the day. So my call on the US 500 for the year, as you guys know, I think it's going to go up. I think in the long run, it'll probably go through the 6.6, maybe even reach 7,000 by the end of the year. I do believe that the US 500 will go up this year, but we'll get some traffic in between, a little bit of a knock here and a little bit of a knock there. So we shall see how that goes. Yeah, it's like I always say, never assume anything about anyone or anything, because assumptions are the mother of all evil. Rather look at facts and trade what you see. Like I always say, the market will always lull you into a false sense of security. So on the investing side, just keep on investing, guys. Every month, put your investments in. Don't forget, investments are good. That's what will make you the money at the end of the day. That's where most of my dosh actually will come from, is the investments, because it's time in the market, not timing the market. This timing the market thing that we play here, this trading game that we play here, is a 50-50 game. No matter what people say about it, no matter how nasty people are about it, it's a 50-50 game, because it's made up of buyers and sellers. The only way you can approach it and win is with the strategy that we use, with the stop losses that we use, and knowing that you're going to win 5, lose 5, make more on your wins, lose less on your losses. So at the end of the day, that's a game we play. But investing, you just sit and forget. You just buy it and you just leave it, and you only sell a share if it's looking really bad and you just want to take it out and put it into something else. So investing is the best thing you can do. Let me tell you now, after 10, 15, 20 years, you'll look back and think, wow, that was well worth it. That's for sure. So I see my bit rate's a bit down today. Let's just hope that the connection is okay. everything goes well. Oh, what's in the news? Let's see what's in the news. Okay, NVIDIA's big CS rival. NVIDIA surges to high. NVIDIA debuts new series of gaming chips. Why Trump would have the final say on Nippon US deal. So Donald's has been confirmed as winning the election, and I suppose he'll be sworn in sometime this month. Okay, so that's done. Trudeau resignation opens door to Trump going easy on Canada tariffs. So that's the news today. I don't think it's market moving news that much apart from Canada. The Canadian dollar, US dollar CAD. As I said to you, I don't hang my hat on the news, but let's see what happens when the US dollar Canadian dollar gets down to this trend support here. See if it bounces off or if it breaks through. If it breaks through, you can trade to the downside. The nice thing about trading technically is you don't need to know a lot about the fundamentals. You don't need to know a lot about what's going on in the background. You can actually, because what you see on the candles, what you see on these patterns, and what you see on a daily basis is effectively what other traders are doing, and all you're doing is following the money. So it should be great. So yeah, this year should be a positive year. I see we've got some people on the live show now. We're going strong, and we're actually getting somewhere. Yeah, I was wondering it. Last week I was going to put out the live show, get the live show on the road last week, and then I realized, you know what, everyone's still on holiday, and I had a few things to do. So I thought, no, I'll get us on the road this week when everybody's coming back to work and getting back on the go again and getting themselves moving. So I'm really pleased to see the channels has moved over the 9,000 subs. That's great. So it's really worth my while being here for you guys. And I'm enjoying helping you guys and getting ahead. Because at the end of the day, everyone needs to know that trading is risky. And it's a 50-50 game, and we don't just trade. So I wanted to show the chap who wanted to know about the trailing stop, how we set the trailing stop, because he's not quite sure how to go about it. So there's the stop loss on this is an example here of the Great British Pound, Japanese Yen. And so the trade, this was at 1,000, right? Okay, so that was the stop loss. 1,000 odd, 195 was the stop loss. Your take profit was at 1,450. So this was a 1.5 to 1 trade, not a 2 to 1. But as I've said to you guys often enough, if there isn't a 2 to 1 and there's a 1.5 to 1, at least it's a profit. And you can always move it up as you go, and maybe it will get better. So at least there is a profit to be had here at the end of the day. So what I did this morning when this got up to 700 and it was in here, I was dying to sell it, but that's not what we do. We don't sell it, because if you sell it, effectively the trade's gone, and then this thing shoots all the way up, and then you feel quite terrible, as well as the fact that you're kind of making less money than what your stop loss was in the first place. So the point of moving your stop loss up is when you see a profit such as this one. Okay, it was at 770 this morning. Now it's at 650, but it's $600 in profit. And you can say to yourself, all right, I'm not going to click out of here. What I'm going to do is I'm going to take my stop loss. I'm going to move it to break even, or even into a little profit, which I've done there. Okay. So now effectively what happens is if it comes back and it drops all the way to this $242, then it takes me out. I'm out of the trade. I'm $400 away from it on my stop loss. How did I work that out? I didn't really. All I did was I said, it's more than $500 in profit. I've got $1,000 stop loss, so that would make me quite far away from my stop loss. I don't want to be that far away from my stop loss. Let's take the stop loss up to break even. Oh, while I'm there, let me make a small profit. And there it is. Okay, it might come back, take that out. It's fine. You don't lose anything. Now what you've got effectively is the trade's costing you absolutely nothing. Now, the point of the trailing stop is this, is if this goes up to, say, around here, say it's at 1,400, 1,350, then you take the stop loss, you move it right up behind it. That way, if it comes back, takes it out, you've effectively made the target you were asking for anyway. And it's as simple as that. There's no maths, there's no calculations, there's no rubbish around it. It's pretty straightforward. It's just a question of, you don't even have to look at where the trade is or whatever. You know, you don't have to say, oh, it has to reach this resistance before I'll move the stop. No, it's in the resistance. In fact, it being in the resistance was tempting me to actually sell it. And, you know, that's the temptation you get, the temptation to sell it. But what we do is we move the stop up with the hopes that it'll continue on to the upside from there, and you'll make more money, and you just keep moving the stop up behind it. That's as simple as it gets. But keep it far enough away. I mean, I'm keeping it $400 or $500 away from here so that it doesn't just take it out. I mean, that's a fair stop loss. Your original stop loss is maybe 1,000, so now you're sort of halving it, making it a bit less. And that way, you're not losing any money, and that's how you trail your stops. It's not rocket science, not the end of the world. A lot of people will get very mathematical and very calculated about it, and you don't have to. Now, there's the other thing where I sometimes tell people to add to the trade. And somebody asked me the other day, especially as a beginner, when do I add to the trade? My recommendation is get this right first. Following your trade up, sort of trailing your profit, because you've gone in with a full trade. It's not like you went in with a small 10% of your trade like DCA, or gone in with half your trade or whatever. You've gone in with a full trade. So that's how much you're prepared to risk, and that's how much you're prepared to win or lose. So master this first before you get greedy. And then what I always say is, you know, you're quite happy to add to your losses, which you shouldn't be doing. As I've always said, you do not dollar cost average. But when you're going up, that's when you dollar cost average, when you're going up, when you're going into a positive. So, for example, on this trade, if we took the stop loss up to here and this thing continued on and broke through this resistance, it breaks through this resistance at the top here. I mean, that's an insane break. Okay, if it breaks through that resistance and goes up, that's when you want to add to the trade. Come back, retest, add to the trade, and go, because then you've got a new trade that's basically developed above this resistance. If you see a new trade that's developed, that's when you add to the trade, if you want to add to the trade. But like I say, before you get to that point, let's master following the trade. Let's master following the trade up in a profit and making a profit that way before we master adding to the trade. But as I say, adding to the trade, you only add to a trade when you can actually see that there's a new trade that's developed, that there's some real positivity behind the trade. And if you walked in the door, you'd be like, ooh, that's a good trade, I need to take that. Because as you know, we don't trade with supermarket mentality. If something's expensive, it's good. And if something's cheap, it's bad. This is the stock market. This is not the supermarket where if it's cheap, it's good, and if it's expensive, it's bad. It's the other way around in the stock market. You see, what I do, Ben, is I'll set a hard take profit, okay? But it's not hard. It's a soft take profit, but it's hard in the sense that I've set it, okay? And how can I explain this? So if I walk away and something happens, it has happened to me a few times, obviously. It gets taken out and you come back and you've made a profit. That's okay. I don't mind that. But what I'll do is if this stop loss gets moved up right behind it, then I'll move the take profit away from it as well. I'll move it up, move it away. So like you would move your stop loss away, which you're not supposed to do, remember, because it's an invalidation area that you set in the first place and you should never move it. But on a take profit, what I do is I switch my mindset around, okay? So what 90% of traders do is when it goes into a loss and it gets to the stop loss, they move the stop loss away because they don't want to lose it, right? What I do is I switch my mindset around, as when it gets to the stop loss, I let it go. And when it gets to my take profit, I move my take profit further away. I move it up. So I keep moving it away. I do what you guys do with your stop loss with my take profit. I move it away, I move it up, and I move the take profit up behind it. That's how I work with take profit. So it's not a hard take profit, but it is because I'm leaving it there. I'm putting it in the market. There's my take profit. If you want to go and try and get it, If you want to chase the money, if you're a clever trader and you see the order there and you want to go and get it, you're welcome to try. But if I'm watching you, I'm going to move it away. I'm going to slip it away from you. And you're going to chase it a bit more. See? That's the way. That's what I do. Okay, so it's hard, but it's soft. But sometimes I do, because I don't sit and watch charts all day, as you guys know. I'll go out, do my thing and whatnot. So I make my trade, I take my trades, and then I go away. But sometimes I come back and that's been hit, and I'm not unhappy about it because I was happy to put that profit target in the first place. But yeah, you can make a lot more if you're actually watching when it happens. Or if it gets close, I'll obviously go to the chart, sit down and move it around or whatever the case. So yeah. But stop loss, as you know, Ben, hard stop loss. Most of you guys will have watched my videos. You'll know my strategy on the stop loss. Keep the stop loss the same on every single trade. If your decision is to have $1,000 stop loss, if your decision is to have a $250 stop loss, or rands or crowns or whatever you've euros or whatever you've got, keep it the same on every single trade. If you decide it's 1%, that's fine. If you decide it's 2%, that's fine. If you decide it's 0.5%, that's fine. Just keep it the same on every trade. That way you know what your losses are. And when you know what your losses are, then you understand you need to make more profit on the profits and lose less on the losses. You will have a whole, like I always say, bunch of mishmash. Like, for example, if this comes back, takes out this in profit stop loss, I'll only have made $242 on this trade. So that'll be a small profit on the books, which really isn't a win, but it's also not a loss. So you'll have a whole bunch of those, and yeah, just have to put up with that. But I'm sure most people are not doing much better with the normal scalping trading that they do anyway. So, you know, at the end of the day, that's just something you have to put up with. Sometimes you'll get taken out, but at least you're getting taken out at a break even or in profit. It's not the end of the world. Greetings from Switzerland. How's it, Sandra? Yeah, welcome. Good to see you. And wish you a great trading day as well. Great trading week, great trading year. It's the new year, man. We're doing the new year. I can't believe we're already, it's 7 days into the new year. Here was the trade of the day today, guys. Tuesday the 7th. Now, what I normally do with the trade of the day, I put it out to all the members in the morning. And this is not trades that I've actually taken every day. It's just trades that I'm looking at. This is what I will do with those particular products, maybe my favorite products that I'm looking at. And I'll say I'm going to buy that, sell that if it gets there. It's just it's also for me a little bit of a thing that I can go back on. What did I say I was going to do with this trade? And you know, there it is. It's if I want to go back through my charts or whatever during the day, that's what it's mainly for. And then you guys get it as the trade of the day, obviously. And then obviously every day I make a video for the trade of the day members as well, because I just go through the markets for the guys. Just helps and does a lot for them. Yeah, so like I say, I was questioning my sanity over the holidays as to why I'm doing this. You know, because I'm really setting myself up for a lot of flack from some of the nasty ones. But yeah, I like doing it. It's fun. It works for me. And like I say, I remember I was actually going to just do 1 or 2 videos, and I ended up doing hundreds. Amazing how addictive this becomes. It's a bit like trading, actually. A bit like trading. You just sort of get into it, and then you want to do it better and better and better, and you want to improve on it and make it this way and make it that way. And yeah, it's just one of those things. Yeah. Try it out one day. You'll see if you're not doing it already. It's actually a lot of fun. So we were looking for a trade on Brent, isn't it? Okay, so have we got one yet? No, not yet. No trade there. We're waiting for a trade. You know how these trend lines work, guys. I hope you watched the trend line video. Big Ken, just join up. Thanks for your valuable information. Absolute pleasure. I hope it's valuable to you guys. My information is very straightforward and keep it simple and easy, and I don't overcomplicate things at all. It's always about just using the support and resistance. You can use supply and demand as well, and use the trend lines. And it's so easy if you consider it. Look at this Brent trade, for example. If this breaks through this support line here and gives you a red candle, that would turn this into a short trade, and then you would draw a trend line downwards. And if it breaks through that trend line, then it becomes a long trade. That's as simple as the trend line gets. If it stays within the trend and you get the green candles coming off the trend, those are long trades. It's so straightforward. Same with the support and resistance. If you get the green candles bouncing up, then it's long trades. If it breaks through, goes down, then it's a short trade. There's nothing complicated about it, and you don't need loads and loads and loads of different indicators. You don't need all the VWAPs. You don't need all the moving averages. You don't need all the stochastics and all the rest of it. Not necessary in the least. I find that in the old days, I used to trade a lot with volume. And I have to say, guys, that volume, it does tell you when there's a fake out market and when there's a strong market and when there's good buyers and when there's fake buyers and so on and so on. But by the same token, guys, by the same token, when you look at a trade and you look at volume, what I've noticed is it's very difficult to determine with the volume, you know, whether you're getting a good trade or a bad trade. Sometimes it can bend your head as well. So I just leave it out. I don't bother with it. I just trade with what I see, and that's good enough for me. That does the trick. It does the job. If you want to throw in a stochastic or an MACD or something like that, you can. But just don't confuse yourself too much with it, because too many different things will mess you around. Go and have a look at my supply and demand videos as well, where you can pick up trades in between, you know, because of the supply and demand and that sort of thing within the lower time frames. Because as you know, we pick up the levels from our higher time frames. We always go to the day chart and pick up our levels there, and then bring it back to the 4-hour chart so that we can trade on the 4-hour chart. If you want to trade on 1 hour, 5 minute, doesn't matter. At the end of the day, this, obviously the system is just a high probability system, works on any time frame, any product. But the important thing to understand is the strategy we spoke about earlier. The strategy, and it's at the second part of every single one of my later videos, the strategy that I'm trying to put over to you guys of keep the stop loss the same on every single trade and make more on your wins and lose less on your losses. That's what makes you the money. This doesn't make you the money. These systems don't make you money. This doesn't make you money. All this does is give you a high probability trade. What happened in the past will in all likelihood happen in the future. And as I've said to you guys, every time you take a trade, the idea is that you want a high probability of making a profit in the future, whether it be in the 5-minute future, the 5-hour future, the 5-year future, just depends. So the whole point of the game is to make a profit in the future. 100% of the traders in the market have the same view. There isn't one trader out there, I believe, that's doing this to lose. So every single one wants to make a profit sometime in the future. Now, that's why this is a 50-50 game, because there's no way that you can 100% beat all those other traders, because everybody's got a system that they believe it works. Now, the problem is everybody's taught that a system's going to make them money. Everybody's taught that these candles and these squiggly lines and these trend lines and these support and resistances are going to make them money. All the courses that you paid for are going to teach you that that's what's going to make you the money. And that's not true. Unfortunately, what's going to make you the money is how you approach the market. The strategy of making more on your wins and losing less on your losses is what's going to make you the money. The probability is just going to give you a win rate. And everybody who knows me knows that I don't believe in win rates, because win rates are only how many times you've won a trade. They're not how much money you lost or won. Because if you win 9 trades out of 10, you might have won $10 on 9 trades and lost $1,000 on 1 trade. So what's the win rate worth to you? It's worthless. All it says is I can walk around saying, I got a 90% win rate. Use my system. Look at me. Let me show you my phone. Look at this. Yeah, right. Good luck with that. Good luck with that. And you bought a Lamborghini with the $90 that you won. And then you had to give it back because you lost the $1,000 on the 10th trade. But yeah, okay, so you're not going to become a millionaire overnight trading. Believe me, you're not. I know that you want me to say that you are, and but I can't. It's not going to happen, and it's going to take a while for you to become profitable, and because it's the psychology at the end of the day. It's how you approach the market and your psychological ability to trade this. For example, you see a profit like this, and your immediate reaction is, I want to click out on that. And it was Kevin that said, I'll try not to smash my hand, because I said to you guys, take a brick, smash your hand so that you don't trade out. Kevin said, I'll try not to. But yeah, no, that's the thing, guys. It's don't. You know, it's all about the psychology and how you approach the market, how you understand the market. Because if you look at a trade like this, you're saying to yourself, I believe the market's going to get to that point again and give me a triple top, hopefully. And if it doesn't, so be it. The reason you put that target in place, or as Ben said, is that a hard target, is so that you can make that money. And you've seen the picture in the market. It's just that it's trading so slowly that we psychologically, we become impatient. We become impatient psychologically. For example, this US 500. It's been bullish for such a long time. And, you know, it's now in a bit of a range. And we're impatient. We're impatient. We're saying, I want to get into this. I don't want to miss out. And the FOMO is one of the worst things, because we all get FOMO, fear of missing out. I don't buy into this now. It might go away from me and I'll never get in. So let's buy it now. And that's what happens. FOMO. FOMO takes over, and you get in and poof, it corrects. And because you've got geared trading, contracts for difference, futures, whatever, takes all your money, and then you can't take it anymore because the market can hold strong much longer than you can. And you end up trading out at a low, losing a fortune because you didn't have a stop loss. And then it goes back up the minute you trade out. Your psychology can't handle that. It's the same way I was looking this morning at, or not this morning, but over Christmas, over the New Year period, of why am I on YouTube? Because can I psychologically handle the sometimes abuse? And it's very low. I mean, it's 2%. It's like 98% of the comments are fantastic. We've got great community and all the rest of it. But you know, there's one or two that just you feel like your blood's boiling. And I said to myself, do I want to do this? Because it's like, can I psychologically get over this? And I made a decision. Yes, I can. I can do this. I can. It's not a problem. There are people out there that need the information. There are people out there. We're growing a great community. So we'll do it. Now, the same thing goes for trading. You got to ask yourself that question. Can I psychologically handle these knocks? Can I psychologically handle the losses? Can I psychologically handle the market going against me? Because, you know, the first thing you're going to say when the market turns against you, believe me, if you're new to this, one of the first things you're going to say is they've got it out for me. You're going to say they're chasing my stop losses. They're chasing me around. They're doing it to me deliberately. Every time I take a trade, they knock me out of it. All these types of things. I've heard it all before. And the thing is, you just in amongst those squiggly lines, you just part of that whole deal there. You disappear in there. They don't know about you. Yes, the pros, when they're looking to trade, you have to understand one thing about the pros. And a lot of guys will tell you, but the pros don't have stop loss. And that's true, because they're trading with millions of contracts, shares, whatever. How can you have a stop loss if you've got a 100 million rand trade or dollar trade or whatever the case? It's so difficult, because you must remember, to trade those big size trades, those big size investments, whatever, you need a lot of liquidity. You need a lot of liquidity. And that's when they say they're hunting out your stops. No, they're not hunting out your stops. The pros are hunting for liquidity because they've been instructed to buy, I don't know how many millions of shares of that particular product or that particular trading thing, Forex or whatever, by their bosses. And that's his job, to get into the market and to go and find that money, because they need to buy. And then they get told they must sell it, and they need to sell it. It's not an instant thing. So a pro will never have a stop loss in the market, because they just got to buy and sell too many shares, and it's not even their own money, it's institutional money. Because with institutions, with investment institutions, you have to understand that they're only allowed to hold a certain amount of cash. Otherwise, their clients are going to be like, what are you doing with my cash? So they've got rules and regulations that they have to follow within their company. So they'll say, we can only hold 5% cash. The rest needs to be invested. And then these guys that trade for them have to invest that money. They have to buy, they have to sell, they have to make things happen. So, these types of guys can't have stops. They even when they're selling out of the market, it's really not easy for them in comparison. Right, JDR, hi Rob, Happy New Year. Quick thing, would you take a short on Euro Japanese yen, or should I wait for a proper break of structure? Euro Japanese yen. What was my trade of the day? It was buy. So let's just have a look at the Euro Japanese yen. Why did I say it's a buy? Okay. What you got to do. Hey, how's it, Peter? How's it going, man? It's always a pleasure to give the info. Okay, so JD, look, hi. Yeah, I call this long because it is still in structure for a long. So what I would recommend you do is take a trend line. This is on the 4-hour. It's perfectly okay. I don't like using the highs, the highs and lows. I prefer closing prices, but it's fine. But in all honesty, there's your trend. Okay. You could draw another one up here as well. So short term, you could go like that. Okay. So what I would say to you is to take a short trade, it has to at least break this trend, or even better, that trend, before you go short. Okay. It's still long up until there. It'll probably go long up until the resistance. So like I say, short trade, wait until it breaks that level, or even better, that level, then it's short. At the moment, it's still long. Okay. Just saying. Aussie dollar, US dollar. My thoughts that it's still bearish, and I agree. It's still bearish, still 100% bearish. There you go. Aussie dollar, US dollar. Same story I just gave you on the Euro Japanese yen, just the other way around. But this is much nicer, this one. We see, there's your trend resistance. Okay. This is a bearish market, full-on bearish market. What I would recommend here, what my idea would be, well, the way I'm going to trade this would be, if I get a red candle that comes off my trend resistance, it's short. And if it breaks this level, and gives me a nice green candle to the upside, I'll counter trade it. Then I'll counter trade it based on, and then it's against the trend. It's a terrible trade, but it's against the trend, but it's a counter trade, because if it breaks that level and gives me a green candle, then I'll go long. But as it stands at the moment, it is short. And if you get a red candle that comes off here now, it is short. And actually, you already got one here. So I believe it is still short. Not only that, you got a pincer top. You see, I don't know if you know what a pincer top is. It's when you get these two candles together like that, and these little pincers at the top. They're together like that. It's almost like a double top, but a pincer top is actually more telling. And that is short. Why we've got this run up to halfway up here, yeah, anything happens in the market, I'd say you can continue on short straight from here, and it's probably going to go down. So yeah, Aussie dollar, US dollar is still short, and yeah, and JDR, the other one, is still long for now. So that's how we counter trade. Okay, so when we're counter trading, so for actually both questions count. Okay, when we're counter trading, we're waiting for this to break through. Now I know this question is, are we still short? We're still short. Okay, but if you were counter trading, you'd wait for it to break, and the same goes on this one. If you're counter trading this, if you're waiting to go short, you're waiting for it to break the structure to counter trade it. And you've actually got two options here. You can go for the short option, the short-term option, or the longer-term trend. Either way, you've got to wait for it to break through these levels. So yeah, I would probably wait for the bigger level before I took a trade there. Okay. Indigenous. Good morning, Rob. Best of the new year ahead. Thanks for all of it so far. Pleasure. Hey, Rob, you're really a great job overall. Have you worked professionally in a financial institution or something? Actually, I've always worked for myself. And I've spent the last 30 years working for myself. And I must be honest with you. I did do a couple of courses in the beginning. I must say I did. But otherwise, I'm pretty much self-taught all through the years. Taught myself everything. Did a couple of courses, but nothing important at the end of the day. But that was when I was much younger. I haven't worked for a boss since I was 27 years old. That's the last time I think I actually worked for a boss. And since then, I've always been an entrepreneur, always done my own thing, always traded. I was trading while I was still working, which didn't go down well with the boss. But anyway. And in those days, we didn't have cell phones, eh? We had to use the phone. You can imagine sitting at the desk phoning. I remember those days. The boss walks in, what you doing? Yeah, no, absolutely. But yeah, no, self-taught and a couple of courses, as I say, but always worked for myself. Yeah, not only trading though. I'll be honest with you. I haven't only been living off trading for the past 30 years. I have had a couple of other businesses in between. I've done a couple of other things in between. I've had some computer stores that I had retail. I had motor parts stores retail. I had property business. In between done that. Just, I don't know why, but I did. And, guys get you involved. Hey, do you want to get into business with this and that, sort of thing. And you get involved and yeah, it's great. And they were great. Made lots of money. Great. But most of the dosh comes from the investments. That's why I always tell you guys to invest. It's time in the market. Timing the market is fun. We do the trading, but for fun, that's great. You make money, you trade, you make money. But most of the income, you say living off trading. No, living off investments actually, because you invest and, that money comes back to you at the end of the day over a period of 30 years. So you just keep the investments going and you keep adding to them every month, no matter what. And that grows and it does really well for you. If you're young and you start now, in 20 years, you're going to look back and say, thanks to that old Rob, he gave me great advice. Just set and forget. Don't worry about where the market is. Just buy the good shares and just keep on adding to them and you'll make money at the end of the day. And you even get dividends off those shares in between. It's fantastic. That's the way to make money. Trading, you must remember the first few years, I actually started a business. I was trading, but I actually started a business alongside it because you must remember you don't make money from trading from the first day. Nobody does. And back then that's where I learned to invest as well, because then you realize that it's investing. So yeah, you got to take that out of the equation as well, because you're sort of working in a business, trading on the side, and if you can call it trading. And So you can't say you've been making money from trading for 30 years. The first couple of years are a bit dodgy. And then it started all to sort of psychologically set in as to how you make the money. Because I had businesses, I understood that you need a business plan to make money, not a squiggly line. So you start to realize that, hang on, if you have a business, if you're selling eggs, you want to buy the eggs for $5 and you want to sell them for $10. It's simple maths. So then you start thinking about the stock market the same way. If I buy something, I want to make more on it. I want to sell it for more somewhere down the line. And then you realize that actually, if I make more on my wins and lose less on my losses, then I'm winning. And it's actually business that helped me understand the markets in a much clearer, concise way. That's why I say I'm very self-taught, because the one thing they do not teach you when you go on any of these courses, they do not teach you that. What they teach you is how to have a high probability system, or how to trade with moving averages, or how to trade with whatever indicators, or how to trade with like this price action, support, resistance, whatever. I know there's the ICT concepts as well. That's similar to this. And then but they just got it from this. But effectively, not to name names, but ICT got their information from Wyckoff. And Wyckoff has been around for, I don't know how many years. And this is basically Wyckoff. That's basically what it's about. And it's just simplified into an easy way of trading. So but once you understand that that's not what makes you the money, then you start to understand how the market operates. And it's about the liquidity. And that's why I say the pros, when they go into the market, they're looking for liquidity. So when you see that, when you see like, why is a pro with millions of dollars going into the market and just looking for money? You know, you think about that, then it's not about the lines anymore, is it? He's just looking to buy that thing. Why is he looking to buy that thing? So, you know, it's not about squiggly lines. It's about, I'm going to make a profit in the future because. And that's the whole basis of the stop loss strategy, the whole basis of our strategy of keeping the stop loss the same on every single trade and making more on the wins. That's the basis of trading. Sorry, I'm laughing at Lazy Turtle here. What do you think of gold simply in a range? What coffee do you drink? Any good coffee. Any good coffee. Look, this one's instant. This is Dougie Egberts, I think. Douglas Egberts, whatever. But I like Nescafe. I like the it's the green one. Yeah. But I drink coffee all day. I love coffee, and I like filtered coffee a lot. Oh, some nice ones there. I mix the Roma with the Italian and brew it up, and so good. So good. Make some nice ones. But this is just an instant Dougie Egberts thing. It's quite good. Anyway, gold. Yes, gold is simply in a range at the moment. There's not much we can do about it. It's dropped into this range and it's sitting there. And that's just because the traders, and that's what I've been saying all along, is there's a whole bunch of human beings behind this that are saying they're not really sure which way it's going to go. So nobody's jumping in and throwing money at it. And you must remember, it's mainly, you know, you're waiting for some institutional guy to come in here and spend a fortune and send it either way. So nobody's doing that at the moment. It's sitting in this range between that 27.25 and, well, there's a bottom here at 25, but I would say more like this 26, you know, 25.80. It's just sitting around here doing nothing. So I'm just not bothering with it at the moment. I'm waiting for it to see which way it's going to break to. And the Brent, we know it's broken through. So that's why I'm looking for a long off this support. If it breaks through that, then we're looking at a short. Okay. I remember a few months ago you tried your first prop firm challenged. Yeah, the trading challenge, we still have it actually. It hasn't done anything, it's there. Okay. I'm not bothering with it too much because I want to concentrate more on the money side of things. But the trading challenge effectively, because it was a a $25,000 account. Effectively, what the situation is with it is you can't take 10 trades. You can take 2 or 3 trades. That's the only time I had to tweak my system. And the system is tweaked in such a way that you can only lose $1,000 a day in a day if you take losses. And in the one day I took a heavy $750 loss, and I realized, hang on, what you got to do is you got to take a maximum of, say, 3 trades or 4 trades so that you don't lose the whole account, and keep it under control. So 1% of 25 grand is $250 per trade. So that one, it worked fine. You don't have to tweak it, but you tweak it in the sense that you cannot take 10 trades in a row. You can only have 3 trades open at any one time. So what that does to me is it limits me in the amount of trades I can have on the platform at any one time. And what it also did was it didn't have every single product available to you. There's a lot of products missing. So yeah, I'm not a big fan. I never have been of funded trading. Never have been a big fan. It's available if you want one. There is one in the link if you want to go and get it, because those guys allow you to trade overnight, and they allow you to trade over weekends and during news and that sort of thing. But you know, if that's your thing, but you know, like I've said to guys quite a few times, is you don't really need a funded trader account. If you've got a couple of $1,000, then you might as well just put that into a cash account and trade it the same way you would trade the funded trader account. In other words, you know, you can't lose more than $2,000 overall, or $2,500. So now you've got a $2,500 account. So trade it that way. You know, just trade with lesser money, and work it like as if you had a $25,000 account. So take the $2,500, put it in an account. Say, okay, let's say I had a $25,000 account, and then trade it with a bigger loss, a bigger risk, like $250 per trade or $200 per trade, knowing that you can take that number of trades. And if you lose that money, then it would be the same as if you lost your account on a funded trader account or challenge. I know these guys now offer instant accounts now and all that kind of thing and what have you, but I don't believe it's necessary if you've got a couple of $1,000. I think you can actually do without them, and you can actually just have to increase your risk. In other words, you can't trade 1% per trade like you would under normal conditions. You'd have to trade, so what, that's at 10%, you know, on that account. So you can only take like 5-10 trades, but then you're risking the same amount as if you're on a funded account. So you do have to tweak it in that sense. But yeah, it hasn't done well. It's this is the funded trader account. It actually, I've left it alone and I haven't really done anything with it. So where is it? Oh yeah, I've got to take that off. It's 23.2, so it's actually in a loss. But like I say, I'm not even trading it at the moment. Just I must actually do something with it. I don't know what, but I'll maybe just go mad with it and see if it wins or loses and let it go. But like I say, it's not my main concentration because it takes too much of my concentration away. You'll notice if you've got more than one platform, if you've got more than one platform and you start trading all the different platforms, it takes away from your concentration big time when you're trying to take trades, and that becomes an issue. Look, I don't trade on the lower time frames. I don't trade on 5 minutes and that, because as I've said to you guys, like 99% of traders lose money there. So why would I be trading there? It's crazy. I've seen pro traders lose there. So at the end of the day, I'd rather trade the 4 hour, the 1 hour, the day charts, and it makes it slower and easier for me, and then I can leave the stuff, go away, do my thing. But even then, you know, you're looking at trading here, you want to take a trade, oh yeah, I must go and take the trade over there as well and switch it on, and it just messes you around. So yeah, if I can do away with it, I will. I'm not too worried about it. Mad Scientist Coffee, bit of this, bit of that. Love it. Have a good one, Rob. Solid advice, appreciated. Yeah, no, it's totally, like I say, I've still got the account open. I didn't lose it or anything. I just, yeah. If you're not concentrating on it, it can be tricky, and then it takes away from your. I noticed it started taking away from the real trading, and that becomes an issue. That becomes a problem because you need to watch the real money. So yeah, it's like last year, the investments made a fortune. One of my accounts made about 40%, and the other one only made about 5%. So you got to look at that as well. And normally the accounts all over 20%. So that worried me a bit. I don't think it's the YouTube that affected it. I was thinking about that, but I think it's more that bloody funded trader account that I got on there that's messing me around a bit. So I'm leaving it alone. I'll when I'm bored, I'll play with it. But further than that, I don't want to mess around with it too much. If I can help it. Yeah. So I see a couple of guys out there as well that are trying to open specific accounts for YouTube now. And it becomes tricky. It becomes tricky because you're kind of trading on those accounts, and like I say, it detracts from your main thing, and I don't like it. So I'll rethink it. I'll have a look at it. I'll see what I can do. I'll see if I'm going to do something with it or not. We'll have a look. Right. Any other news that's of interest to us at the moment? Okay. Everything is about Trump at the moment, so at least NVIDIA is doing well. That makes me happy. It was good to see NVIDIA doing well. Yeah. I actually own Coke shares. They're not doing so well. Okay. Yeah, I don't put them all on here. This is just to see what's going on. So, yeah, remember, never assume anything. Always do what you see. Okay. The trailing stop. We did the trailing stop for you guys. We showed you the trailing stop. Platforms, like I say, everyone worries about what platform they're going to get. All I worry about if I'm going with a broker, I get a lot of questions about platforms and who do you trade with and all this sort of thing. Do keep in mind that you must trade with a broker that's in your country. Always choose a broker that's in your country and that's been around for a while. And also bear in mind, that's not always about the indicators and the fancy charting packages and all the rest of it. It's a lot to do with what you can trade, what's available to you to trade. Even in investments, can I invest overseas? Can I invest anywhere? I actually always recommend, I don't get anything for it, but there is a link in my description where if you're in South Africa and you want an investment account, one of the best ones is Easy Equities. They're fantastic, and you can trade anywhere and the prices are good. So yeah, look at that. Yeah, you must look at overnight charges. You do get charged, but on obviously on contracts or on futures and that sort of thing where you've got geared trading. If you have long trades, this is interesting. If you have long trades, you pay overnight charges per trade, or you pay for the trade overnight. Just remember, if you have short trades, they pay you. You actually get money back. So yeah, keep that in mind. That's why a lot of guys just trade short. No overnight charges there. But short, the trouble with the markets are inherently long. Forex, you can go either way. It's great, but indexes and that are inherently long. They tend to go up. So, okay. A random asset. Okay. Choose one. Choose any asset. Pick a name, guys. Pick a name. Pick a name. I wouldn't know where to start. Because they're not really random to me. So pick an asset. Pick something that we don't normally look at. It's all the same. And then we'll have a look at it quickly. See what it's about. And I'll show you how we actually look at the stuff. Show you what we do. So I wonder what we could look at. Yeah, the chart of a random asset. CrowdStrike. Shall we see if that comes up here? I don't even know. CrowdStrike Holdings, NASDAQ. Okay. There's a lot of gaps in here. Is this the correct one? Is that the one you're looking for? Because if it is, then what we're going to do, we're quickly going to have a look at it, right? So the first thing we're going to do, we're going to use this. It's fine because I've never analyzed this, okay? So let's just have a look at it. Great. So here we have a chart. On the 4 hour, most certainly does look kind of bullish. Has had a bearish run. It's gone bullish now. What we do is we take it to the day chart. The first thing we do is we take it to the day chart. So now we're on the day chart. And on the day chart, we can see that we have a bullish phase, a correction, and a continuation of bullish. Okay. What we're going to do, we take it to the line chart. Now we've got a line chart. And now what I know about this company fundamentally, nothing. Okay. So what have we got? We're looking for a resistance level, and we're looking for our closest support level. And that's actually quite easy. There you go. So we're going to draw in our resistance level, which would appear to be there. Okay. So we've got a resistance level. Let's draw in a support level, the closest support level, because we don't want it to be down here. And then, goodness me, it's going to take forever to get there. Okay. So what level does it like to take on? It likes to hit there. Okay. So there's your support level. Okay. And now I'm going to add a little feature. That is a trend support, because I can see a clear, nice trend support here. Now, what makes a nice trend support is if it hits 3 points. If it hits 3 points, you're in. Bonus. So there's 1, 2, 3. I could count that as a 4, but there's 4. Okay. So you've got a nice trend support in here. That's your daily. Take it back to the candles. Now you've got candle charts, and it's clear, right? It's clearly in this trend, clearly going up along this trend support. It's bounced off of this support level, and it's going long, it's going bullish. Perfect. Okay, so now you got that. Now you take it back to the 4 hours, because you're trading on the 4 hours. Doesn't matter what you're trading on, just take it back to where you're trading. Now, how do you trade this? Effectively, at the moment, it is, however, sitting in the middle of nowhere, but that's not the end of the world, because if you see over here, there's a supply of money right there. What's a supply of money? You've got these 3 big red candles dropping down there, indicating that that green candle is where there's some money lying, and there's orders lying in that spot. So what you can expect is possibly this coming into those orders, turning around and going back down. That's not impossible. But what you want is to either take it short from there down to there, or to wait for it to break through the support line, give you a red candle, give you a short, or through this main support, give you a short, or breaks through this level up to here, gives you a short off the main resistance down, or if it breaks through the resistance, gives you a green candle, gives you a long. At this exact point where it stands at the moment, there's no trade. You're waiting for a trade. Why are we waiting for a trade? Because we're patient. You have to be patient in the market. It's not just going to come. Now, here's the thing, guys. You'll see I called short, I think 3 times, and I called long maybe once. I called long if it breaks through that resistance. I will call long if it gets off this support and gives me a green candle again. I'll call long there as well. So that's 2 longs, okay? But mostly short. And mostly short is because I'm actually looking at this chart and seeing, once again, shoulder, a head and shoulders, and it's very much level here. If this turns around and goes down here, you could have a head and shoulder scenario, which means it's very short going down. That's how you trade it. That's the way we trade it. So like I say, I'll wait for it to either break through here short, or to come off here short, or to break through here short. Or I'll wait for a green candle off here long, green candle out of there long. You got to wait, you got to be patient. You can't just trade it today. Keep in mind that that could be a head and shoulders, which will be negated when this gets to that level there. It will be negated. Right, so does that help? Do I need to go over it again? Is everyone on the same page? It's important that you guys are on the same page with us. And that's just, like I say, guys, don't forget. That's the squiggly lines. That's just your high probability trades. That's the possibility of which way the market's going to go. Just remember that if you take the trade, you have to put, like in this case, it would be a $100,000 account. So you would say, I want $1,000 stop loss. You work out where your stop loss is going to be. So let's say you're at this 350 level here. You work out how much is $1,000 if that's your cost, say. And you work out how much is $1,000 from your stop loss. You say, I want my stop loss down here at 335. So how much is $1,000 between 335 and 350? How many contracts? You take that many contracts. You make sure that your profit level is way up there. If that's your profit level, you definitely got a decent trade. Then you can say, all right, I need that many contracts to cover $1,000, and that's going to make me $2,000 or $3,000 or whatever the case. Good. I hope that helps you guys. Okay, so you get what I'm saying there when you're taking a trade. You just work it out that way. This funded trader markets is actually quite good with that. For example, this Great British Pound, Japanese yen. If you wanted to take a trade, you would just say new order, and you would say stop loss at. Let's say I wanted to take a trade, a long trade, stop loss at 195. Okay, and I would say take profit at 190, 199. And in this case, it would be a terrible risk to reward because the reward is less than the risk. But then what I would do is just work out over here what my trade size would be. Get me $250, and there you go. There's $250 loss. Okay. But I wouldn't take this trade because the risk to reward is horrific. Okay. So you just work it back. You work out what size your trade can be simply by working out where your stop loss would have to be. Okay, yeah, call it an order block, yeah. It's a supply of money. So it's supply and demand. The demands, I'm not big on abbreviations and naming things and whatnot, so don't boggle your mind with names of things, but just remember what they're about. So if you want to call it that, that's order block, it's fine. Okay. Here's a demand of money. Here you see there's a whole bunch of green candles behind it. So if you see a red candle and then you see at least 3 green candles going up behind it, that would be a demand of money. And I don't draw it because it is in the support level anyway. And then on the top, if you see a little green candle or a green candle, and then you see 3 nice red candles behind it, and in this case there's 4, then you can draw that in. That's a supply of money. In other words, there's money there. Okay, because it's pushed it down hard. And that's why you say the 3 red candles, because it's pushed it down, which means there was money there. And if it goes back to that money, there should still be some money left over there. That's what you're looking at. So that's just supply and demand. I do have a supply and demand video on my series. Go and have a look for it and check it out. It'll explain it very nicely. But that's what you use it for. I normally don't go up to the day chart or the weekly chart or anything like that to get my supply and demand. I take my supply and demand levels off the same time frame that I'm trading on. It's just that if I'm in the middle like this and I'm looking for money, then I'll look for my supply and demand levels. You can also look for fair value gaps, but I don't believe big in fair value gaps. It's an ICT concept or whatever. I'm not big into fair value gaps, but they can help you as well. Fair value gap, like that. And you see there's a gap where it ends there and it starts there. And it gives you a fair value gap. And that fair value gap is actually right there at that level. So that can also work for you. But I don't want to confuse you guys and make it complicated. It's not necessary to do that. But yeah, if you know it's there, then it could stop going there and come down. I prefer to look for the supply and demand levels. They're more reliable. If it gets into that, it'll probably come back down again because that's a supply level. So don't play too much into that. Try and keep it simple with the resistance, the support, and the trend support and resistance, because that will keep it simple for you. And also, if it breaks through and you can trade it and that sort of thing, I just put those in as extra. It's extra confluence, and it does help. I mean, I could start drawing Fibonacci's in here and things for you just to get confluence and all that sort of thing. But the more you draw in, the more information you put into the charts, just remember, the more you start working against yourself. So I've always said, if you put two traders in the same room and give them the same system, you'll be surprised you'll get two different results. You'll always get two different results because no two traders trade the same way. No two traders agree on the same thing. And everybody's got their way of putting things together on the chart. So, if they're trading with a similar system on the same sort of chart and all that, you'll be surprised two traders will achieve a different result because it's all about how you approach it. So do be careful of that. That's what a lot of people say. Like, for example, I'm showing you a method to trade, but there's no way you can literally copy my trades and achieve the same results. You can use my ideas, you can improve on them or not, and you can take them and say, I want to tweak it this way and do it that way and make it better for yourself. And I always say, one of the best ways to learn is to take my way and maybe another Oak's way and this Oak's way. And if you put all the information together, you'll get a system that works for you or something that you're comfortable with. You don't have to only use one particular way of doing things. But the more you put into the chart, the more you complicate it and the more you actually, it's almost like having another trader in your body. You start working against yourself because you see a trade, you want to take that, and then that says no. And you're like, wait a minute, and then it starts complicating things completely. So do be careful of that. Do be careful of that. That can whack you big time. I know a lot of guys out there are how can I put it, dissing other traders and saying they're all lying and this and that and the other and whatnot and saying bad things about people. And at the end of the day, my opinion of all the other traders out there that are showing you things on YouTube, or even if they're selling you courses and all that, it doesn't matter. 9 times out of 10, they've got something good to say, good to tell you. And there might be some good information in what they're telling you. Everybody wants to know, I don't know, they want them to show themselves making millions and throwing money around and all the rest of it. That's not what it's about. You can pick out some really good information from a lot of different traders they're trading. They do their own trading, and some of the things they do are pretty good. So some of the guys out there I disagree with, but that's fine. That's how human beings work. We don't all agree on the same thing. For example, I don't agree with dollar cost averaging, and there's a whole bunch of traders out there teaching dollar cost averaging. Doesn't mean I have to agree with them, but there's nothing wrong with understanding what they're doing. So, and it's not that they're lying to you or getting it wrong or anything. It's just, it's a system. It's something they do and it works for them. So I actually get annoyed with these guys that make money off YouTube out of hurting other people or being nasty to them, or, you know, I don't know, trying to talk bad about them or whatever the case. That for me is just scum for me. Those are just scummy people that don't belong. And they're just effectively building a business off of other people. And it's not a nice thing, actually. I don't understand how some human beings are like that, to be quite honest with you. It's just nasty. And I've seen it a lot. I've seen a lot of it out there. And I don't agree with it at all. I think it's just scum. So anyway, yeah, that's just my feeling. So yeah, I say go to the other traders out there and as well, and have a look at what they're doing and see if it fits in with what you want to do. Obviously, pick things that make sense, that along the same lines, like price action, support and resistance, that sort of thing as well. It's not that I want to promote everyone else or anything like that, but we're all out there, and there's a lot of good information available to everyone. And Elaine, yeah, thanks, please, yeah, do. I never ask anyone to like and subscribe, except at the end of my videos. I normally write there, subscribe. I always forget. But we still have 9,000 subscribers, so that's amazing. That's absolutely amazing. I don't think it's something you have to do. There's lots of people that, that, hey, you must, ask for likes, comments, subscribe, and all that sort of stuff. And nah, if the guys want to subscribe, I'll do my best and give you a good video if I can. And if you don't like it, then you're not going to subscribe. I mean, if you do like it, then you will. And that's the basis of it all. And if you enjoy my shows, you'll come back and you'll watch more. That's it's not like we've got thousands of people watching a live show, so that's cool. I know what people want to watch, but if I do that, then I'm going against my own morals effectively and lying to myself. If I go and do the things that people want to watch, like the flashy Lamborghinis and the trading 5-minute charts and showing you candles going up and down and all the rest of it. I know we'll get loads of viewers doing that, but then I'd be lying to you and I'd be lying to myself, and that's not what I want. So we'll keep it as it is. It's a small channel for now, and we're having fun, and we're learning how to trade for you guys. Well, you're learning how to trade. No, I don't trade platinum, actually. I have traded it before, but actually, for me, I know there's loads of people that do, but one thing you must remember about commodities is they're cyclical. And by cyclical, I mean they go up and they go down, they go up, they go down, they go up, they go down, they go up, they go down. So just like Forex. So they're quite easy to trade because they're very much trading in a range over time. Platinum at the moment seems to be going down. As I say, I don't trade it, so, at the end of the day, here it is. But, yeah, you can trade platinum. I think one of the reasons I didn't trade platinum much is because its liquidity wasn't that great at a time. Gold had more liquidity and a couple of these other things as well. So there's so much to trade that I think I just didn't bother. So, I can't trade absolutely everything, although if it's available, I will. Looking at platinum at the moment. Let me have a look at platinum quickly. Put it on a day and just have a look at what we've got. It's an interesting, it's very much in a range here, eh? Even though it did come down, it really is very much in a range. Let me just see what we've got here, if anything. I'm just going to have a look at it from a perspective, because maybe you just want to know a little bit more about it. I don't know. Okay. Boom. Yeah, okay. Let's just have a look at that. And yeah, it's a long trade on the day. Look at that. So if you are trading platinum, go long. Yeah. 4 hours. Oh, Let's, there's your platinum trade on the 4-hour. There's your resistance. There's your support. It's broken out of the support. It's broken through the trend resistance. That's a long trade. You can literally go long on this. I guess it's going to go quite far up here. I guess it could reach 1,000. So if you're trading platinum, yeah, it's long. Looks long to me. Looks like a decent trade, actually. But yeah, I don't trade platinum, so cool. There you go. I hope that was interesting. That was for Frederick, who asked now, do I trade platinum? So it's going to be a great year this year. We're going to have an interesting year. I do believe the markets are going to go up this year, if not today, sometime this year. And I do believe it's going to go well. I believe our channel is going to grow as a community together. I think we're going to be a fine community, and we're going to continue on the work that we did last year, getting you guys ahead on the markets, getting you guys into a good place in the markets. And as long as you all understand that it's going to take time and you're not going to learn it in a day, then we'll get there. We'll eventually get there. And if you can keep it simple from the start, because I can tell you, you'll get these courses that will, sure, the guys can make it complicated. Even I get confused sometimes with the stuff the guys come out with. And if you can keep it simple from the start, like we just did now with the platinum, you saw that. It's so simple, guys. But as I say, that's just your high probability. The difficult part, I mean, a child in primary school can do the system, let's be honest. The difficult part is all up here. It's all in the mind. It's all in the psychology. It's all in how you approach it. It's all in sitting on your hands and not getting out of the trades too early. It's all about managing that risk and those losses. It's all about, over trading with revenge trading. It's all about how your heart can hold on when you're losing. Yeah, it's all about the psychology, and it's all about the strategy. And that's why I always put the strategy there for you guys. It's so important to trade with that strategy. Because if you avoid that strategy and you just trade with the squiggly lines, you're going to lose. It's going to take you a long time to learn how to win. So what I'm doing effectively with all my years of experience is just trying to get across what I stumbled across many years ago. And that is that you need to use a strategy. You need to use some kind of business plan to be profitable in the market. You need to look at it as a business, not as a squiggly line or as a roulette table. It's a completely different thing. You see, also where you'll start to pick up on it is if you're investing and you've already started investing, and you've been doing it for a while, you'll also start to understand how markets work and what happens and what have you. It'll make a difference to you as well. So, it comes to you over time. You start to figure it out, start to pick it up. As I say, a primary school child can learn how to do the squiggly lines, but it takes an adult to learn how to trade. That's why so many people lose at trading. Really 60 to 80% at swing trading like this, and day trading. Position trading on the day charts and weekly charts. And if there's a lot of guys out there that will believe they can achieve it on a 5-minute chart, a 15-minute chart. Let me tell you something, guys. They did an experiment. They put 100 pros in a room and 99% lost. So the pros can't trade on a 5-minute chart. How are you going to get it right? So even myself, I've traded on 5 minutes. I tried it. I tried trading on 5 minutes many times. And I was lucky most times to just about break even. But other than that, it's, you're guessing. Effectively, you're guessing. You must remember, the lower the time frame, the more unreliable this information becomes. That's a fact. The lower the time frame, the more unreliable this information becomes. So how's that? You know, that you just play it with it yourself. Just look at it yourself. Do it on a demo. And use exactly the same system. Use any system that you learn on the market. Use the one you got on the course. Doesn't matter. Go into the 5-minute time frames and go and try and play with it. And you'll see how unreliable the information is on those lower time frames. You never know which way it's going to go, which is why we trade on the higher time frames as much as possible. I know we're trading on the 4-hour, but you can even do it on the day. I don't mind, you know, or the 1 hour. It doesn't matter. But I would say the lowest time frame you want to be trading on is the 1 hour, particularly if you're new to this game. And really, if you think you're going to get it right in the 5 minutes, there are very, very few human beings who have the mental strength to handle a 5-minute game. What you're doing on a 5-minute chart is effectively 50-50. Effectively, you're just picking a spot. And if it goes up, you make money. And if it goes down, you lose money. And that's it. So there's no real probability. There's no real science behind a 5-minute chart. Because the information on a 5-minute chart is insanely unreliable. So the reason we trade our information off the day charts onto the 4-hour charts is because you want the most reliable information you can possibly get. And that is, what are the traders doing over that period? And that's, you know, that's a whole lot of information put together. That's all the traders in the market put together. And you've got all that information for a whole day. And then it makes more sense. And then you can see where the traders are going and what they're doing with it. So yeah, US 500, not looking long yet. Just be careful. Don't get into the longs just yet. I know a lot of people, a lot of these people are itching to buy in, and I forgot FOMO. Yeah, Crafter, you know what? You know, you've seen a lot of people trading on the 5 or 1 minute charts. Apparently they trade over small movement. It's scalping, you know. And the trouble with scalping is simple, and that is, like I said, the win rate thing. Man, I don't believe in win rates. So what actually happens is they'll trade 9 trades, they'll win 9 trades because they're scalping. So every time it goes into a win, they take a profit. And then that one loss, because I don't know any scalpers that have got the discipline to take a stop loss. So all the scalpers watch it go into a loss with the knowledge that it's going to go into a win. But then if it goes deep into the loss, it'll take them out. So what they'll do is they'll win $10 on every single trade for 9 trades. And on the 10th trade, it'll go a couple of $100 into loss. And they'll hold it and it'll go more into loss. And $1,000 in loss, they'll be like, okay, I've got to get out of this now. So you've won $90 and you've lost $1,000. That, to me, that puts you $910 in a loss. So that's what that's all about, Crafter. Apparently trading over small movement, that's what happens. And you see the psychology behind it here. It's not about, oh yes, we're going to win 9 trades out of 10. What it's about is, I just don't know any short-term traders that have got the psychology to control that stop loss on a 5-minute chart, except for some 1 or 2 guys that I do know that are big, and they do it. They do take their stop losses. They make the money over 15, 10 points, that sort of thing. But they set solid stop losses. I mean, they don't play around and they take those stop losses. But most of the guys, they don't. Interesting, South Africa pushes 80% of the world's platinum. Morning from Scotland. How's it, Kevin? You know, I'm about to go and you're just coming in. Been there, done that. Yeah. Okay. Good. Yeah. So, yeah. So I presume you mean you've done those 5-minute chart things. Yeah, it's so. But look, there's a few guys out there that can trade these insanely short time frames, and they can take their stop loss properly, and they understand the game, the psychological game. But imagine your psychology on these 4-hour charts. You already know that it's quite tricky. Imagine it on that fast time frame with real money, but big money. Take the same risk on a 5-minute chart that you're taking on a 4-hour chart. See what that does to your psychology. Yeah, you're going to have to watch the rerun. Yeah, you're going to have to watch the rerun, and we'll take it from there. But yeah. Okay, so anyway, yeah, I've got a guy calling me just now about a new medical aid, so I shall have to go and chat to him, and we shall see. Right, good. Now, watch the rerun, and let's do this on Thursday again at the usual 2:30. And it's been fun, actually. It's been really good fun. I do believe that Thursday we should have something at least happening, some action. We should have the markets going somewhere. And it's a bit slow still at the moment, but I believe it is going to start taking off. But guys, I think thanks for watching. I think I must head on now and head on my way. And I hope I've answered most of the questions. And I hope things are coming together for you guys. Feel free to ask questions anytime, even in the comments. I do try and answer all the questions in the comments, but sometimes the answer might be a bit long. So then what I'll do is I'll tell you, look, I'll get back to you in the live, or I'll get back to you a bit later on in a video. Because sometimes to answer a question in a comment's really difficult. It'll be a comment this long, and so if I do that, I'm not sort of pushing you away. I'm just saying I'll definitely get back to you. Okay, so I do my best to try and answer every single comment still, so even though we have quite a few. And if I ever get to a point where I can't, then we'll just have to work around that. But for the time being, we're doing okay. We're keeping up with it. And yeah, 2:30 is a bit of time. But I don't know why I do the morning show on Tuesday. I might relook at this year. I might actually do both in the afternoon. But I think it's because, like, one guy said good evening to me here. So there's a few of you guys that are in that time frame in the world where it's late. So I can catch you guys early, and then on Thursday I catch the other guys. So there's a bit of a balancing act here. So maybe I'll keep it the same. Let me not mess around too much with it. And guys, thanks. Okay, so till the next one. Thanks, and we'll chat to you really, really soon. Have a good trade.